everyone, and welcome to day one of New Video Frontiers. I'm just going to take you through a few different things that we've got going on. So I'm going to give you a short presentation, a couple of announcements from us, and a little bit about what to expect today. Okay, so firstly, I'd like to wish you all a very warm welcome. I know that we've got people tuning in from various parts of the world today, so if you've gotten up in the middle of the night or had an extra early morning, it's much appreciated. Also, a big welcome to anyone who has had the misfortune to be furloughed or perhaps made redundant. If you're looking for new opportunities, you are more than welcome. And one of the things that we generally do at events is to try and encourage attendees to make people who've traveled welcome. But I think this year, by all means, do make people from abroad welcome. But I think this year, we'd like the focus to be on, helping people who've had the misfortune to be one of the many thousands of people let go in the industry this year, and to try and, if you can help them out with an introduction at your own company or at another company, that would be great if some good can come out of the event. Big thank you to our partners who have enabled us to make this event free. Their support is hugely appreciated in what was a difficult year for us, along with everyone else. And yeah, much appreciated, and you've all been a pleasure to work with. So getting used to the platform. So if you haven't done so already, please add your LinkedIn or your Twitter profile. That way you'll be able to connect far more easily with the people that you meet. Obviously, it's not obligatory, but it will make your life a little bit easier if you want new connections. You should have your cam and mic on for the networking. Once the content starts, the networking will end. But we will have, obviously, a networking break later today. We will also leave the room open for people to connect with one another at the end. So if you're ready to mingle, you'll have plenty of opportunities to do so. So if you've got any technical problems, please try refreshing your browser first, or contact Danique via danique@videoadnews.com. You should have this information in the emails that we've been sending out. Just get in touch with our team or via the contact form on the site if you're having any difficulties logging back in. We think that shouldn't happen. If the room does go over capacity, we have a plan in place for an overflow room. So from us, we are killing off the Video Ad News brand. Part of the reason we wanted to do this was because we, as we've grown as a business, we want to be a little bit less niche. That's not to say our focus won't be on video and connected TV advertising first and foremost. It will. But we're launching a new brand, Video Week, which you can see coming over the horizon there. So part of the reason we wanted to have a new brand was because we want to move into different areas, and we didn't feel the old name lended itself very well to adding on new words. So how will Video Week be different? So we're going to have Video Week research. Indeed, that is up and running, and we are in the process of putting the finishing touches to our first major piece of research. We've looked at the European CTV advertising industry, and we've been doing that in partnership with PubMatic. One of the reasons we wanted to do research practice is that we feel that there's a lot of PR masquerading as research, and we feel that there's a need for accurate, honest data. And part of our T's and C's in working with any client will be that the research will be authentic, that it will reflect the industry as it is, not as the client would like it to be, and that we'll sort of produce research that has integrity behind it. We don't feel the need to to fabricate how effective video and CTV advertising are. I think we all know it's a big growth area, that programmatic is the way the industry is going, and there's no need to dress it up. We've got the Video Week podcast, which if you are a podcast consumer, you can subscribe to that now. That's been up and going for a few months, and thanks to everyone who's given us great feedback. It's still early days with the podcast, but the feedback has been excellent so far. You can subscribe to that now. Video Week Learn will be a new e-learning platform. If your company would like to sort of take a position in educating the industry on a certain topic, or perhaps you want to be able to train people up on how to use your platform, Video Week Learn will be for you. And Video Week Bulletin will be essentially a place where people will be able to sort of tap into company announcements. We get an awful lot of press releases every single day. We simply don't have the time to write about all of them, but we know that sometimes even a small feature update can be of interest to somebody in our audience. So Video Week Bulletin will be a place that people can go and keep up to date with company announcements. So how can you connect with us? You can connect with me, add me on LinkedIn. I'm very promiscuous on there, and I'll happily accept an invitation from anyone working in the industry. You can follow the Video Week page on LinkedIn. That's up and running. I think we're still at about 400 followers. It's quite new, so any follows there will be welcome. You can subscribe to the Video Week podcast, as I mentioned, on your podcast app of choice. We've got Apple and Spotify there, but regardless of your reader, you should be able to find us by just searching for Video Week. And finally, you can follow Video Ad News on Twitter. So coming up today, in designing this year's agenda, we decided that, you know, we look at our core issues on video and CTV advertising, of course. But how the industry is responding to COVID, I think, is first and foremost in most people's minds. So we've taken a step back from, you know, just hardcore video and CTV presentations and panels. There's still no shortage of them, but we also try to balance out the content. That's also bearing in mind the fact that you're going to be watching this on your computer screens. So we wanted to bring in some of the world's most engaging speakers to make it easier for you to sort of stay online and to actually enjoy the event as an event, rather than just tapping in for one session and leaving. We're very pleased with how the content has come together. We're very proud of our agenda. And yeah, hopefully you'll all enjoy it. So our hashtag for today finally is NVF20. So yeah, hopefully we'll see you on Twitter or other social platforms. So I hope you enjoy the rest of the content for today. That's all from me, and we will kick things off. Cheers.
Hello, everyone. I'm Knapp, and I'm the Chief Economist at IB Europe, and I very much look forward to this session on exploring the opportunities for connected TV advertising in Europe.
And I'm Emma Newman, and I'm the CRO for EMEA for PubMatic. Also looking forward to having this conversation with Daniel. But before we do that, let me hand back to him so he can just spend a few minutes setting the scene.
Thanks, Emma. I think we all know that CTV is a tremendous opportunity. It's more than a buzzword. It's front and center of many company reports of key projections for growth. But I wanted to just quantify a little bit of what is it actually that we're talking about so that we can have a more substantive discussion. And when we speak about television, I think it's important to bear in mind we're not talking about any old other medium. Actually, if we look back in time, television is the medium of the 20th century, the medium that gave rise to modern consumer culture. Here we see data reaching back to the end of the First World War, and we can really see the explosion of television in the 1960s. So the society that we live in today, the consumer society, wouldn't be possible without this medium. And television is, of course, being disrupted right now with a move towards over the top and a digital logic being infused in this world. So how we do that, it's not only a big opportunity, but also we need to be conscious and careful of how we execute it, just because of the history and the importance of this medium. The nature of TV is fundamentally changing. You can see here that there's an explosion of streaming services, both paid for and ad funded, that are competing for consumer attention. And nearly every day or every week, we're seeing new initiatives. So last week, we saw an announcement of Google TV launching, and Planet V, for instance, a new ITV addressable solution launching in the UK. All this is taking place at a radically changing device landscape. Smart TVs, in terms of shipments, are increasingly becoming the default for consumers across the world and also across Europe, where in 2029, we already had nearly 80% of all shipments being smart, which of course with a short delay also affects the overall installed base, which means a completely different infrastructure of devices in the living room, which enable this new opportunity. We're already also seeing an inflection point in how people access television and television-like content. And this is nowhere more apparent than in the SVOD landscape. We look at the global OTT subscriptions, they have now overtaken pay TV. This is a structural trend that is going forward year after year. 2020, of course, was an important year in this because of the lockdown and also because of sports events not being available on live TV, on pay TV, the launch of Disney Plus and other services. But of course, as we see SVOD stacking, more and more services being added, we're seeing a consumer fatigue, we're seeing wallets being squeezed. So there's a second effect that this trend also fuels hybrid and in the next wave also AVOD-based solutions. And this, while this used to be contained to the US, we're talking about Europe today, this is no longer just a United States phenomenon, but it's happening across the world. So this cord cutting really provides a really fertile ground for the rise of CTV. The real impact of COVID has not just been a decline in ad revenues overall, but a shift in how they're being allocated. If we look at this chart here, we can see a structural transformation where more and more is systematically spent on digital. And this, of course, also means that other media need to reinvent themselves and build a bridge to digital media, and television is front and center of that. There's lots of data on CTV, on growth. Most hard figures come from the US, but we have lots of indications that this is a strong opportunity in Europe as well. If we look at some market statistics, this consumption changes can translate into tremendous growth. If we look at how the AVOD market is stacked up, we can see that by 2024, already a third is likely going to be CTV ads. And we figure out some of the long-tail advertising in China, which has a very specific market structure. It's going to be even more, and there are structural factors here which are boosting this, as you can see on the right side. Definitions are important, and we're going to talk about this in a second. There's an abundance of different definitions and a definition confusion. We need to fix that in order to put this growth on a good track. Also, we're seeing an opening up of the competitive landscape where incumbents are faced with new entrants and new innovations. So very interesting to see how this battle for the consumer, battle for attention will play out. I conclude by saying that this opportunity is quite different to the digital ad opportunity, which on the right you see a strong concentration on just very few markets. But if you look at television on the left, you can see there's a tremendous addressable market in Europe where you have a lot of markets that are $1 billion plus. So we're likely going to see a less concentration in the proliferation of CTV just by looking at the incumbent TV market than we've seen in the digital space. And with this, I very much look forward to my discussion with Emma. Thank you. Do you see Europe as this aggregate region, or what do you think? What countries are most advanced? And can you give us a little bit of reading of also some specific companies that are pushing the opportunity?
Well, I think that first and foremost, Europe is not a country, something that I spend quite a lot of time reinforcing. But that said, you know, we have undertaken some research across the region, and there are definitely differences between each of the individual markets. But there were two things that came back from that research that were consistent with regards to the CTV space. First is there's a lack of unified definition. There's definitely a lack of consistency in terminology, both within and across markets. So for example, HBB TV and IPTV are regarded as CTV by some, but not by others. Some regard it as smart TV inventory only, or on-demand apps only, or even bundled it with all of their digital inventory. So there's definitely a lack of unified definition, and that's potentially holding things back. There's also a lack of confusion, or actually it's not a lack of confusion, there is a confusion around the role of CTV. And there's varying responsibilities on the buy side around who owns CTV. So battle for CTV control across teams, certainly within the buyers, seems to be quite prevalent. You know, there's an overall trend, which is DSPs see it as digital and agencies vary. broadcasters see it as digital, but as a digital extension of TV, not digital native. I think there are a lot, alliances are starting to form to fend off the Google competition and increase addressable market. Cooperation is definitely starting to take place on technology standards, and also sales houses are working together. So there is a degree of coming together. And I think that almost that coming together can be regarded as historic. We've not really seen that in the past. So despite a lack of market maturity, there's already deeper collaboration on CTV than in most digital platforms. When you start to think about, some of the market differences, so those two things were consistent. When you start to think about market differences, what some of the things the research has shown us that, by far, the UK is Europe's most advanced market. It has, it's the most mature market. It's probably most aligned to the US. There is definitely scale from buyers. There's high tech penetration. And I think it's a bellwether for how competition will play out between broadcasters and the new TV platforms like Amazon and Roku, Google, pay TV providers, et cetera, et cetera. If you start to think about Germany, the HBB TV standard's been a huge market driver in Germany, placing CTV firmly into the TV heritage rather than the digital heritage camp. So that goes back to my previous comment about where does this actually sit. This has allowed for more controlled expansion and testing on the sell side without disintermediation fears. Although HBB TV is complemented with other models of viewing and selling ads. And it's a strong existing market with a very consolidated sales house structure. So it could make that a model market for how the sell side can win if they collaborate together. The French market's got a strong IPTV heritage and is a programmatic innovator market in display. But also the regulatory environment has artificially held back CTV, although we have seen some changes in that recently. So I think France is an extremely exciting place at the moment as the regulations on addressable advertising have been lifted. So you could say the market is on the cusp of an addressable revolution. You go down to Spain, very active market community in driving standardization. The buying landscape is very much dominated by the agencies. The pandemic has driven down CPMs massively on linear TV. So that's so cheap now that the attractive scale matters more than the innovative channels for many buyers. And actually, when you talk to the buyer side experts, they expect YouTube and the US players to dominate the market if the local players don't collaborate. So there's that whole thing about collaboration again. In Italy, broadcasters are extremely concerned about competition from YouTube, and sell-side consolidation are likely to come together to pool resources, in particular around data. Agencies are definitely investing in DMPs to combine first-party data. Most CTV is currently sold direct. Programmatic pipes have been developed, but more sort of as a future-proof solution rather than something that's actually happening today. In Sweden, the market is extremely nascent. Very little activity overall. There is the vast majority of inventory is sold direct and is usually bundled with linear TV. The programmatic infrastructure does exist. And there is contradictory that there is oversupply despite small markets because programmatic buyers can't activate CTV inventory due to their PII and cookie-based targeting parameters. So as you can see, yes, there are some consistencies, but there is a lot of difference across each of the individual markets. And that's why when anybody is approaching EMEA, you need to think of it as, individual markets, not as a region or as a country. There are, varying differences. And I think that if you're going to be successful in CTV in EMEA, you need to understand those and factor those into anything that you do.
I think that's been very clear from your answer that not only are the markets different, but they're also at different stages of development. And macro themes seem to be similar, like global competition, how do you define it? Who's responsible on the buy and sell side? What kind of logic, digital or TV buying logic, is CTV embedded in? And then lastly, the theme of collaboration, which I found particularly fascinating, because if we look at the history of publisher alliances, for instance, in the display space or even in the AVOD space, very early on, the market realized that we need to aggregate things together, to work together, to provide sufficient scale and few singular points of access, where more concentration, paradoxically, meant enabling more media diversity. But many of these initiatives, if we go back, these go back 8 years, many of these have now vanished from the face of the earth. And there were few kind of inherent problems in those. The first was governance structure. Who's responsible for this, and what commitments do individual companies really place on it? And the second was what's being shared. Is it just inventory? Is it also data, people, and so forth? And I think we have learned as an industry from how to not run such cooperatives or alliances. And at the same time, as you said, I think in CTV, it's even more important because the prize is so much bigger. There's so much to lose if you get it wrong, but there's so much to gain if you get it right. So building these alliances in a different way than what happened in the display space, 2010, 2012 onwards, is key for the success of CTV, I believe.
I think that's absolutely correct. And I think there's two other things as well, which is, I think one of the reasons why some of perhaps those traditional display alliances didn't succeed was the points that you made: governance, what are you sharing? Is it data? Is it audience? Is it inventory? Pricing models. But also, you've got a bunch of people who have been so used to competing against each other that just even that mind shift is quite challenging. And so definitely, I think that the CTV space, look back at what's happened in the past, learn from the past. Take what worked, ignore what didn't. That definition of madness is doing the same thing over and over again and expecting a different result. Well, let's not do that. But if you think about, we've talked about CTV and how it's expanding and how it's slightly different. What is the role of programmatic in your view in CTV in Europe? How will it develop? How will it help the industry develop?
I think it's important to not do the second step before the first. Definitely all media are becoming programmatic at some point or the other. We're seeing it, we saw that evolution from display to video. We're seeing it in out of home. Well, we even have print media, so paper, being transacted programmatically. And in all of these examples, you see that what programmatic actually is extremely different. In one spectrum, you got open market RTB, so which is a real-time buying and selling, and for others, it's more programmatic planning, using data to predict and to optimize the media buy. We've already touched in our conversation on the concerns of the sell side in protecting their inventory. And I think here the experience from programmatic really comes into the play, where most sellers have direct sales strategies. They are bundling CTV with linear TV in inventory, where a programmatic approach at scale often isn't possible right now. I see programmatic really as the second phase of the evolution, when there is more liquidity in terms of the supply. But I believe we are going to, although it's very small right now, we're going to see a bit of a forced acceleration. And let me come back to one of the points you made earlier about faster planning cycles. What this unique circumstances in 2020 have shown is that marketers are starting to plan differently. So we had tactical and strategic approaches at both ends of the spectrum. But increasingly, we're seeing something which I would call opportunistic marketing, which is finding windows of opportunities in a very uncertain environment, where, let's say, a travel ban is being lifted, where certain things are becoming possible for consumers again, where you need short planning and really, really fast execution cycles. And it's this switch on, switch off nature of programmatic that can be incredibly helpful here. Also, if all media are being transacted programmatically, and we are moving away from third-party cookies in a world of kind of micro walled gardens and silos, there's the question of orchestration. How do I really connect the world of display, of performance media, of out of home, of e-commerce and so on? How do I connect that in a holistic strategy to what's happening on television? So I see programmatic here as the connective infrastructure, potentially between all of those different silos. So if CTV wants to be part of a broader media mix, which is increasingly digital, having this programmatic infrastructure is going to be important. Now, is it going to be OMP? Is it going to be PMP? Will we not have auction models at all? That's a big question. I see, because of the limited inventory, in particular in the premium environment, there's going to be a stronger focus on direct deals or PMPs in the beginning. But having spoken to a lot of broadcasters recently, they are already planning for a programmatic future, which isn't there yet. So I was surprised to hear that many already have programmatic partnerships and visions in place how a programmatic world of CTV would look like, which seems to be that there's a 2 or 3 year planning going on in the background behind the actual opportunity right now. So, well, the market is small. Everyone is expecting it to be there. And many market participants are kind of wise enough to already think about it now. Should we do a waterfall structure? I'll say no. Do we need to talk about header bidding? And you mentioned you have a solution. And at least in theory, I see market participants taking these interactions seriously, and people who even come from a legacy TV background, using the programmatic language, if you will, are being familiar with concepts that a couple of years ago, the TV world would say, I don't want to have anything to do with that. Yeah. But let's stick with programmatic right now. I mean, you have followed the evolution of programmatic for quite a while, both its opportunities and pitfalls. What would be your message to buyers and sellers? How can they learn from what happened in programmatic so far? And how can they really ensure that they are readying themselves for a programmatic CTV future?
So I think that, I mean, you've touched on that, CTV isn't exactly programmatic yet, although I would suggest that, recent announcements from ITV, Channel 4 and the Trade Desk certainly seem to be as though there is a push in that direction. So maybe it's sooner rather than later, who knows? I do think that, there's some things that the CTV programmatic landscape ecosystem, call it what you will, can learn from the programmatic ecosystem that was display. I think that, some things to think about is that, display went a little bit down a rabbit hole. The market quickly developed into a shouting contest about who had the best one-to-one targeting machine. Mm-hmm. Then it sort of ran into this headline, sort of ran headlong towards the direct response side of things, potentially at the expense of the consumer experience, which may have affected long-term publisher revenues and arguably offered little or no benefit to brand marketing. And while some publishers and tech players may have excellent data sets to enable micro-targeting on CTV, I think, back to the point we said earlier on, TV is TV is TV. CTV needs to respect, the empirical proven value of linear TV when it comes to being able to build brands and have cost-effective reach in a high-quality environment. So I think that that's really important. Even in the programmatic landscape, recognize CTV for what it is, and learn from display, and make sure that, to your point, CTV is probably closer to linear TV than it is potentially to digital advertising. So think about that as you sort of move into this programmatic space, because it can be programmatic. You just need to be, aware of the role that you're going to play, both for your consumer, but also for your advertiser. But Daniel, if you think about that, I mean, there's a huge opportunity there. I think everybody can agree with that. And, the pace and, some things are accelerating, some things are decelerating. What steps do you think the industry should take collectively, you know, to support the growth and development of the connected TV ecosystem?
I think the way how you phrased the question is really interesting. You said, what steps could the industry take? And I think you're already hitting the nail on the head, is that it's not a question whether steps to collectively need to be taken or not. It is, which are those steps? So the industry, it's not optional for the industry together to take some steps. They must take some steps together, because what we have described in our discussion here, this opportunity isn't going to make itself. I mean, we in Europe, we have to make the market. And but just looking at the US and saying this wave of opportunity will spill over naturally is not going to happen. So going back to the real basics, is we need a joint definition that is industry consensus. What is CTV? And that definition needs to be detached from the business models of those who are in the landscape, because everybody, depending on what they buy, what they sell, will have their own definition. And I really wish for people to come together as industry experts, not as representatives of a given company, but as industry experts who want to bring this ecosystem forward, to sit down together, maybe with us at the IAB or in other contexts, to define what is CTV or not. Because this certainty is extremely important for buyers to know what are they buying, and for sellers, what am I investing in? What is the opportunity? What standard should I have, and so forth. HBB TV was one of those standards, but we see there's a lot more happening. The second thing is about scale, how to preserve the attractiveness of the scale of television. And we've already seen when DTT came about back in 2000, back in 2012, I was doing a lot of work on that space, in particular in Spain. We realized that the market is actually too small. The market is too small for so many new free-to-air broadcasters, and we have seen a wave of consolidation afterwards, where if we think of Cuatro and La Sexta, two Spanish DTT stations, were being acquired and absorbed into existing groups. And something similar needs to happen in the CTV space as well. Consolidation of inventory, fewer points of access, which then allow better standardization and easier buying. So these collaborations that we talked about, I think they need to be accelerated on a national level. And probably if we look at what's being done on the data side, maybe also on an international level. Because competition, it doesn't mean just we need to talk about providing joint inventory, but how can we analyze it as a seller? How can we make data available? That often requires costly investments. And if those investments are being shared about infrastructure and so forth, you can de-risk your investments and work much faster. So I think these are some of the key things from just my industry observation point of view, what the industry needs to do. But you in this industry yourself, Emma, so what do you think are the key things that need to happen to make this market a reality?
Everything that you said, I agree with, obviously. And I think it's, there's this consistent theme that's running through the conversation that you and I are having, but also the research that we've done and what you generally hear about in the marketplace. And I think we can kind of sum it up quite succinctly, which is education and collaboration are absolutely key. So that's the first thing. Take the time to learn from what I call the original digital publishers. Don't make the same mistakes they did. So if we, as an industry, if we listen, we share, and we learn, then I genuinely believe that we can leapfrog some of the hurdles that have been faced in the past.
I think the term leapfrog is really important, because we don't want to have this five-year phase where we're figuring out how can we correct our mistakes. And I think the CTV world is very well set up to avoid that and build something that is sustainable. At least I could say, I could talk about this topic forever, and it's fascinating. And I want to thank you for your time. I think looking at the virtual organizers, our time here is up. But thank you everyone for listening. Thank you, Emma, for having this conversation with me. It was hugely enjoyable.
Thank you.
Good morning. I'm Ian Whittaker. I'm Director of Liberty Sky Advisors. I was a city analyst covering the media and digital sector for 20 years. I've been twice Analyst of the Year. And I just thought I would share my thoughts on advertising and the global pandession and what to expect moving forward. So I'll be talking about macro trends, advertising, and then also as well what we see happening in what I'd like to call the sort of broadcasting video space. If we start off with the macro themes, I think the first key point to say is we don't know where we are in terms of the pandemic and what happened, and things can change very quickly. Now, sort of this and the next slides are from Informer. Informer is the largest global events operator. They are sort of in many countries. What I like about events is they give a very good insight into a number of macro trends. Essentially, events are key for many businesses to sell their products. Also, as well, you get a mixture of domestic exhibitors and international exhibitors, and the international ones, of course, have to travel. So it's a good sort of indicator of business travel as well. And overall, it tends to be sort of it gives you a good impression of what's happening with the economy, but also as well, sort of what's happening in terms of travel trends and so forth. Now, this was from in June, sort of Informer then, when they updated the market, sort of expected that essentially events would be back to normal pretty much from October and November. In their most recent update, which was at the actual end of last month, what you can see there is that essentially sort of international exhibitors have just sort of, it's not happening this year. China is really the only market where things have gone back to relative normal situation. And even there, sort of there were no international visitors which are coming in. And what this is telling you is that essentially in terms of the global economy, sort of that it has been disrupted sort of on a worldwide basis. And that in fact, actually, if anything from 3 months ago, people are probably a little bit more pessimistic as to when things will return back to normal. Now, the second point would say is that there's definitely some improvements in tone that are coming through. These are new forecasts that have come out from the IMF, and what they showed, they're just literally from sort of last week, showed us an improvement in the 2020 global GDP expectations. So it is positive there's been an upward revision. And certainly when you look at the stock markets, particularly in the US, are expecting sort of things to bounce back relatively quickly. Stock market performance has been sort of very good there. In China, it's actually been sort of better. A lot of this is driven by the tech stocks. If you look at the old economy names, and they tend to react pretty much similar to what you could see with the FTSE, which is the blue line at the bottom. FTSE is very much old economy in its composition. It really has very few tech stocks. And since a sort of initial bit of a bounce back post the trough, it hasn't really done that much. If you then go on to sort of what we're likely to see, well, China's likely to be the outperformer when you look at the markets. These again are from the IMF forecast. You can see there that China is really the only market that's expected to show growth of the major economies. The right-hand side, what it shows is sort of a mixture of economies, really based on what was the expectation going into 2020 and what the IMF is thinking now in terms of global economic growth. And what you can see there, the dotted line is sort of previous expectations, the sort of the lines, the solid lines are where we are now, both for the advanced economies, which are in blue, and also as well for developing markets, sort of which is the green, ex-China. You can see there's actually been a lowering of expectations, and really these economies will be smaller in 2021 than they were in 2019. And one point to sort of emphasize here is not everyone is impacted equally. That goes for businesses. It also goes for consumers as well. This is a map of the US, just looking at the change in employment data. What you can see there is really the variation amongst states. So there's a huge difference there in terms of what we're seeing. And again, sort of this will reflect the composition of employment within those various states and sort of what people do. As you've seen from business results, some have done very well, for example, particularly in tech. Some in retail have done pretty badly. What we do expect, though, is we do expect a permanent reduction in the economy due to pandemic. Now, the IMF, in its most recent forecast, estimate that there's been a permanent loss of around $28 trillion to the global economy. The right-hand side here sort of is looking at sort of the UK in particular. it's looking at real private consumption. And what you can see there is that even in the forecast from the Office of Budget Responsibility in the upside scenario, realistically, it doesn't get back to pre-pandemic forecasts until the first quarter of 2025. Now, for many firms, another point to say is this is going to be very much of a cost-led recovery. That's to be expected. We don't know what's going to happen with sort of the economy, and so many firms are taking the view that it's better to be cautious. This is from the Deloitte survey of CFOs in the UK, but if you were to survey CFOs in most global economies, you would expect to see the same sorts of trends. The emphasis there is very much on reducing costs and increasing cash flow, and also as well to strengthen the balance sheet. So nobody at the moment, or very few people, are really thinking about this in terms of sort of this top line is going to recover anytime soon. When it comes to the consumer, there's the obvious issue here of employment and what happens for cyclical issues when it comes to jobs, but there's also a structural issue here as well, in that many firms have actually taken this crisis as an opportunity to delayer their workforces, to bringing new working practices that essentially favour the employer over the employee. And you also have the growing issue here globally of automation of jobs, which threatens to unleash a new wave of job cuts over the medium term. Now, in terms of this can really sort of fit sort of within both macro trends and also as well sort of advertising. But I think it's worth emphasising here on e-commerce, which of course is of increasing importance. But Amazon may not win the e-commerce race. Many people think so. But one thing this pandemic has done is actually made e-commerce a centre for many ordinary retailers' strategy, as opposed to sort of a peripheral part of growing, as it were, before the pandemic. Now, if you look at online sales growth for many retailers, what you'll actually see on the right-hand side is that Amazon is actually at the bottom of the growth rate. Yes, it is much larger than many of these companies in terms of online sales. Amazon has around a third, just over a third of the US e-commerce market. But you can see that many of these retailers are catching up. And in fact, sort of the comments that have come from retailers is that having a physical store is actually a great advantage in driving online sales. And that's obviously something that Amazon doesn't have. Now, look at the sort of trends within advertising here. So actually, one point to say is that advertising has held up remarkably well. Typically, advertising follows GDP. That's no great surprise. Advertising is intangible capex. Yeah, essentially, when you look at it, just as firms invest in physical plant, they invest in advertising in order to grow their brands. What you can see in Q2 is that actually advertising, which is atypical for a recession, actually performed better than the decline in GDP. And we're already starting to see comments coming through in the third quarter that advertising should be better in Q2, and indeed that trend should continue moving forwards. Now, sort of going into 2021, the expectation is of a rebound. These are the Group M global advertising or the US advertising forecasts. There, what you can see is a sharp rebound. Bear in mind that 2020 does benefit from US political ad spending. You take that out, Group M is forecasting at nearly a 9% rise when it comes to US advertising forecasts. So a pretty sharp rebound, but of course we've had sort of 2020 been quite a sort of sharp decline as well. But also as well, there's some structural benefits sort of for advertising. That means it actually may sort of recover more powerfully longer term than expected. One thing to say is that you will get more firms sort of being created, the sort of creative destructionism, and particularly direct-to-consumer firms becoming more important. The second point to emphasize, and this is something that Mondelez say, is that there may be a structural shift of monies from companies going from areas such as travel and property, which actually should see a structural decline because of the changes in working patterns, and that money being moved into advertising in able to help support brands. But also as well, another area that brands are likely to have to spend more on because of, and particularly here you're looking at the FMCG groups, is because of the shift into e-commerce and sort of this idea here of Q-commerce, which is this idea that essentially a very small created number of brands are sort of advertised to consumers. Now, the point is here that effectively, if you do get a move to e-commerce and Q-commerce, what it's likely to mean is that there's likely to be a greater sort of power of the retailer or the Q-commerce provider to sort of promote certain brands over others. And so it becomes increasingly important for brands to be known and recognized by consumers in all of those brands sort of are wanted by consumers, so that retailers and Q-commerce providers actually have to shop them. And this will be an increasing importance moving forwards. Another thing to emphasize, and it goes back to this point before, that sort of many companies are really hunkering down on costs, but being increasing intolerance of waste. Yeah, this is the chart that I'm sure many of you know from ISBA and PwC, talking about the potential waste in programmatic advertising spend. So on digital, sort of in the past that has been tolerated, in the future that's unlikely to have lost the shareholder value that comes from this sort of wastage. Advertisers will no longer be willing to accept that nearly half their money is wasted in the advertising pot, and that will have implications particularly for ad tech. The final point to say in terms of the general advertising market is that what also brand advertising may benefit from is a shift of money coming from other areas. And one thing to look particularly here for is paid search. Paid search here is the new version of the old Yellow Pages business. Now, Yellow Pages, the classified directories, they definitely had their role, but they were never seen as brand building tools. And what's happened here is there's been an explosion of paid search globally that, quite frankly, has meant that paid search is taking up too much of advertisers' budgets. And what I think is that essentially this over time will start to decline as advertisers realize, just like Adidas did, that essentially paid search is really too much of their budget and it doesn't really contribute to overall sales. But what really is important is actually the need to spend on brand. Now, just looking at television and sort of thinking about this, my view of television is that essentially the view of television as linear TV is increasingly an outdated fashion. The way to look at broadcasters is very much an all-encompassing video. In fact, the phrase that we'd use is total video. The first point to make here, though, is I think the broadcasters really do dominate the video advertising day. This is from the UK. It looks at a variety of data. And what you can see there is that because many people sort of go through ads very quickly in terms of YouTube and Facebook, when it comes to pure advertising, the amount of adverts that people see, then broadcasting sort of very much dominates the pie, even for 16 to 34-year-olds. So the broadcasters' platforms definitely remain a very important medium. But also as well here, what you have is that you're seeing this shift here from linear TV to what, as I said before, was this total video idea. If you look at streaming in the US, streaming is now 25% of total usage of TV in streaming capable homes. Netflix has a third of that, but also as well, you've got Hulu and Amazon and Disney Plus that also have quite noticeable shares within there. And what this will lead to, I think, is sort of an increasing emphasis on the streaming part. And this is an important point because if you look for Netflix, which of course is the leader, a third in the US is obviously a significant share, but it doesn't mean that it's got total market dominance. And I think one of the trends that you will see here increasingly is that Netflix will be outgunned by the bigger broadcasting media groups who are now increasingly getting into streaming. So these are people like Comcast and Disney. The crucial thing here is just free cash flow. How much cash do these companies have in order to spend on their streaming services? And if you look at this, Netflix is very much outgunned, even in 2 years' time, when it comes to people like Disney and Comcast. Now, in Disney, what's quite interesting is you have activist shareholders now calling for Disney to actually spend more on its Disney Plus service and actually take it out of dividends. You usually never hear that from activist shareholders. So I think this is going to be an important point for Netflix sort of moving forward. So that I think increasingly it's going to be in a very difficult position, particularly when it comes to the financing of production. The final point we'd make when it comes to the broadcasters is to do expect AVOD to grow in importance. Now, again, going back to the Nielsen numbers, looking at the share of streaming in the second quarter of 2020, you can see nearly a quarter there is others. If you go on the right-hand side, it gives a breakdown of that other category. You can see there that sort of in terms of AVOD, AVOD's around a fifth of that other category. Now, sort of the expectation is as consumers become more hard-pressed because of growing unemployment, increasing sort of concerns over what happens with job security and also as well pressure on wages, and there will be a growing willingness to take cheaper AVOD-supported streaming services rather than necessarily pay for full subscriptions. So do expect that in terms of AVOD, AVOD becomes increasingly important to the streaming environment moving forward. Thank you.
Well, hello everyone. My name is Tim Cross. I'm senior reporter for Video Week, and this is our panel Buy-Side View, Making CTV Deliver for Advertisers. And for this panel, our aim is to give a fairly frank and honest look into how the buy side looks at the opportunity on CTV. We obviously hear a lot about its strengths and benefits from the sell side, but we want to take kind of a look at what buyers think is really good about CTV right now, but also the areas where we're looking for a bit of progress to be made, and the things that they really value in terms of the buying tools that they can use. So we've got 4 wonderful panelists with us today who I'll let introduce themselves. Alex, we'll start with you.
Okay. Hi, everyone. My name's Alex Khan. I'm the MD of International for Unruly. Effectively, what that means is I look after all our commercial activities outside of North America.
Mihir.
Hi, I'm Mihir. I'm the head of broadcast at Total Media, the behavioural planning agency, and I oversee all the planning, buying and strategy behind all our broadcast activity.
Kevin.
Hi folks, my name's Kevin O'Sullivan and I'm the Director of Business Development at Amobee for EMEA, and what that encompasses is essentially looking after strategic partnerships for both our advertiser and broadcaster solutions in the region.
Is it Nicola?
Hey, so I'm Nicola. I am the head of AV planning at the Seven Stars.
Wonderful, thank you everyone. So to start off, I think it's important to ask, what do buyers actually want from CTV and how do they sort of categorize it? We don't want to go too far into the where it sits in the plan question, because we've got a whole session on that later on. But maybe Mihir and Nicola, like for you guys, what do you want out of CTV and what are its strengths for you?
Nicola, do you want to go first?
Yeah, so I think it's pretty obvious that there's quite a lot of growth in CTV viewing, and there's quite a lot of chat around the SVOD fatigue. So I think ultimately what buyers and agencies want is a bit of a unified / kind of simple way of reaching those consumers on kind of CTV screens, whether that's kind of adding incremental reach to an AV campaign. We know that kind of linear numbers are dropping and there's a growth in CTV viewing, so that feels like quite an obvious win. I think there's an awful lot of targeting availabilities with CTV. So that I think that's really important, and working out exactly how that feeds into a plan, whether that's part of the incremental reach stage or whether that's looking at quite lower down the funnel stuff. So more kind of talking to people in market. Seems to be quite a lot of availability and opportunities. So I would say that's kind of definitely the direction that we would kind of want to push it. I think there's a huge opportunity in the flexibility of CTV, and at the moment that's something that clients are kind of calling out for. But also there's that element of it being quite a low cost, easy kind of entry budget kind of level, which means that smaller brands can access TV content in a way that they might not have otherwise been able to do. So what we want from it actually is quite a lot, in short.
Mihir, how about you?
Yes, I would agree with a lot of almost everything of what Nicola has said, and I think from our perspective, the industry talks about CTV as kind of the marriage of TV and digital, and I think for us, we really want to take all the best bits of digital and all the best bits of TV and put it together and kind of leave behind the things that aren't so great. So, for example, TV has always been the mass-reaching media, and that is undoubtedly its best attribute. But with CTV being able to tap into kind of audiences beyond just demographic and kind of location-based audiences. I think CTV offers us a wide range of behaviours and habits that we can target on, which is really great. Which Nicola basically said opens up at the lower end of the funnel to TV, which previously TV hasn't necessarily been able to access. I think also it's key to note that often consumers don't distinguish between an advert that they've seen on the big screen and where it's kind of come from. So everything to consumers is TV advertising. So if it lowers the barriers to entry for some of the smaller brands, as Nicola mentioned, then obviously that's a great thing because they can still be seen to consumers as being advertising on TV. In terms of what we want from it, I think it's developing great at the moment. There's the obvious issues, which I'm sure we'll talk about a bit later on, but things around measurement and kind of attribution and all those sorts of things, that it needs work. But I think we have to acknowledge that it is a new and exciting space. And I think with time, it will continue to become increasingly effective and important to us as agencies and our brands as advertisers.
So with those sort of strengths and opportunities in mind, how does that affect how advertisers want to buy CTV, both in terms of, I guess, the metrics they're looking at and the creative they're using? Alex, I know, Unruly has been sort of getting to know the CTV space since the Tremor acquisition. What are you seeing in terms of, how they want to buy and run their campaigns?
Yeah, I think it's a following on from the previous comments. What do they want to buy? They want to test it. They want to understand it. It's not the UK is progressing very nicely and at speed with CTV, but it's not at any levels of size or uptake as the US market. So I think you've got a UK market where everyone's talking about CTV. There's a lot of positive around CTV and the fact that it opens up local, regional and national advertising, which you can to some extent do with linear TV, but it's not necessarily as accurate as CTV. And so brands really are in that kind of test phase. They want to have a look at it. They want to see what kind of metrics they can get from it. And they want to see how the audiences respond to a brand engaging with them when they're at their most relaxed time, i.e. consuming content that they've deliberately turned on, which is what's happening with CTV.
Is that aligned with the rest of you guys see?
Yeah, I think so. I think to Nicola's point, I think it does depend on who is planning on buying the CTV. So if it's coming via the investment teams, that's usually they're looking to extend the reach from the linear. I think, as Alex said, CTV it's a great testing ground at the moment for the legacy digital teams because this is the new shiny toy that they get to play with. But I think beyond the actual inventory, the data opportunity is pretty interesting when we look at the likes of ACR data sets, which are pretty new to the UK market. Obviously, we've seen the likes of Gracenote and Inscape be prevalent in the US for the last few years. But you've got the likes of Samba TV here. You've got Samsung ads have now launched their own DSP in the last week off the back of their ACR data set. So I think that's going to play an important role. And then as we look beyond the UK in particular, I think we see a lot of kind of testing with the experiences of CTV, particularly via the HBB-TV protocol. We see a lot of brands looking to turn CTV ads into more interactive engagement opportunities. So that's something to keep an eye on in the coming years.
Yeah, I think the data opportunity is obviously important to look at because it's such a huge part of it. What do you make of I guess, it's different from different, broadcasters will have their own data tools that you can use, but do you think at the moment there's a lot of interesting stuff you can do in terms of data and targeting on CTV, or are you still kind of working with a fairly limited set of data tools?
Well, I think it comes down to whose data you're using. If you're looking at the OEM manufacturers, as Kevin said, with the likes of Samsung, LG, you have the ability to use HDMI cable data, which will give you the size of the TV, the IP location, etc. But you also have ACR data, which gives us a more in-depth view as to what's happening with the household, what's being consumed, what they're looking at, which apps are where they're spending most of their time, which OTT apps they're doing and platforms they're engaging with, and which sites they're connecting to. So that is if you look at where the brands are going to try and drive to, that's the data they're after. But if you're the OEM manufacturer, that's your golden goose. You're going to keep that to yourself. And if you look at the way that Samsung operate with their sales team have access to all that. Any third-party partners don't. So data is going to be important because it puts the connection to the consumer into context, i.e. what is being looked at in this household and how do I adapt my my messaging to that data. And then that brings in the whole question around creative execution and how brands begin to adapt their creative execution for the use of CTV.
I think that's a really important point as well around creative execution, because we can't just see CTV as an extension of TV. It can operate as a completely different kind of element to it as well. And brands should use the data capabilities and things like contextual targeting, etc., to make creatives that are more relevant and more appealing to consumers in those moments. In terms of how data is being used, I think it's really interesting how certain data is being shared with agencies. So like Alex said, that if you go through the Samsung ad sales team, you get access to more data than you would if you went through another third party to access their content. So it's obviously kind of their play to keep everyone in one environment, which is completely understandable. But obviously, from a buyer's perspective, eventually you want to be able to buy more inventory in one place, and that's I guess one of the biggest challenges of the industry, that it's already becoming a really fragmented marketplace, and a lot of that is down to kind of the different layers of data that each provider can kind of supply for their own inventory.
Yeah. I think we'll talk a bit more about the fragmentation issue a bit later on, because it's definitely a big one. But I want to look for a bit at the reality of CTV supply in the UK and Europe. We've been working on research on the reality of CTV in Europe, and what we've heard sometimes in the UK is this idea that CTV at the moment is mostly just the BVOD services and YouTube on connected TV sets that buyers are interested in, and that's sort of where all the value is. Nicola, is that sort of in line with how you see it?
Yes, I would say at the moment. The trouble is that the broadcasters have the best content, and they have a wealth of data, and they have a hell of a lot of inventory behind it. So that has to be the kind of the biggest selling point of CTV. I think as well, it's familiar to clients, and they understand the content that they're going to be around, which is nice, and they fully trust it. It's brand safe. There's no fraud, and it's a comfortable place for brands to want to spend. That being said, we know that there is still value in the long tail. The smaller kind of there's lower numbers, but the way that those impacts and impressions are being traded are really interesting, and there's lots to be learned from those kind of long tail inventories by the broadcasters. But obviously there's a difficulty in that because it's not unified. We need to find a kind of solution to make that feel more accessible. But for now, I think broadcast AVOD and YouTube feels like, I mean, it's the bulk of the inventory, and it's the content that clients definitely love being around.
Yeah, again, I'd completely agree with that. And I think what Nicola said around the familiarity is one of the key things. The fact that even being on CTV, your brands can still have presence in the likes of whatever it is, Coronation Street, Britain's Got Talent, etc. For them, that's a really, really big deal. However, we talk so much about the growth of AVOD in this country, and how it's in Europe in general actually, and how it is really kind of taking over in terms of people's viewing habits and stuff. For our clients, and I know this is probably a TV legacy thing, it's more clients always, or not always, often talk about programs that they watch, and they relate their brand back to that. And I guess if you're talking about some really niche AVOD content, which is really great and professional content now, it's not kind of like user generated content, it's really, really good. often they shy away from it because it's something that they're not necessarily aware of. But again, that's up to us as kind of agencies and planners to move away from kind of the small-minded that, oh, if I don't watch it, then the rest of our brand's audience won't watch it.
Yeah. I mean, do you think this problem's going to sort itself to an extent as the smaller AVOD platforms and services grow? I mean, there's been like a few stories this week. I know Pluto TV have picked up Narcos from Netflix, which is a pretty big show, like one of Netflix's originals, which sounds like a pretty good one for them to have. And we reported about IMDb TV, which is Amazon's free service. I don't think they've announced it yet, but they've started posting for jobs to run that in the UK. So that's coming over here, and that's a bit of a weird one because you don't hear tons about it here, but I think they've got tons of content on it, and obviously it's got the financial heft of Jeff Bezos behind it. So do you think we're going to just see over the next few years these services grow, and then there will be a lot more value outside of the broadcasters and YouTube?
I don't think we can ignore the rise and the increasing popularity of the AVOD scene and from the OTT platforms. You've got the likes of Roku, Pluto, Viacom, who all have relevant content. Look at the amount of popularity or the growth in popularity in the last 7-8 months of Disney with Disney Plus. They've put on 10 million in APAC alone. They put on 10 million subscribers in 5 months.
Yeah.
You just can't look at that and say, I get the BVOD situation and I get why they want to keep almost a walled garden situation. And you can see that with ITV's launch of Planet V. But in reality, when as an industry, we're trying to get brands to understand, if you're buying an audience, it's the same as you're buying an audience online in traditional in-stream or out-stream. You're buying the audience. You're not necessarily buying the content association. And none of these platforms, in terms of the OTT ones, have any inferior content to BVOD. And you've just highlighted one where they actually have as good, if not in some cases, better content. But what is happening is it might be older content and it might be taken from stock library, but it still has a loyal following, it still has an audience. And if I look at the research that we've just done at Unruly, we've just done a whole CTV research, US, UK, and some in APAC. And you're looking at, there's a definite rise. Probably a third of the users will end up going AVOD route as opposed to staying with an SVOD. And of that, about a third again will keep both. So you're talking about 2/3 going to a full AVOD solution. So the content, when that filters through and the popularity arrives at on the demand side and the growth of those channels or those platforms, so will their ability to buy more up-to-date and relevant content. So we shouldn't ignore that. I mean, there is value in having. That's why every TV company in the world shows repeats, because they're popular and people want to watch it.
Yeah.
And so I think that's an important thing to look at, particularly on the UK CTV scene. There is going to be increasing popularity for these OTT platforms.
Yeah.
I definitely agree with you, Alex. I think it's going to be great for the industry. I think when we look at the BVOD side of things, we just need to remember that there's reasons why they get a lot of the budget. It's because they have the strict AB booking deadlines, and there's a lot of incentives to book campaign budgets with those services. So I think those kind of, if you were to think of it as a boulders, rocks and sand, the boulders are still going to be the broadcasters, but I think more of the revenue will kind of drift down to the OEMs and what we call the long tail. But as you said, the content there is just as good. And sometimes it's even more relevant when we look at niche publishers within the CTV space.
Alex, you mentioned there Planet V, and that's definitely something I want to talk a bit about, is the emergence of these sort of self-serve buying platforms, because we've seen other examples. Hulu in the US launched one recently, earlier this year. What do you think are the strengths of these sort of buying tools where it's still direct to the broadcaster, but it's using a self-serve sort of system? I mean, Kevin Amobee sort of works with broadcasters to produce these sorts of tools, including on Planet V. What do you think are the strengths of those sort of tools?
Yeah, I might be slightly biased on this one, but I feel like there is a lot of strategic value to both the broadcasters and also their clients. Obviously, agencies are responsible for purchasing the vast majority of linear TV, and therefore it makes sense for them to build solutions that they can offer in partnership with those agencies for their, well, specifically the ITV Hub inventory today and what they will offer in the future there. I think from the broadcaster side of things, what they need is they need to be comfortable to offer their inventory and data to buyers, knowing that they are able to protect that. I think they've kind of sat in the background and they learned some of the lessons from some of the more traditional display publishers who've maybe got burned a bit by some of the big tech players. So I think broadcasters are in a good position to actually kind of take control of their own destiny. And obviously that's going to lead to things like fragmentation, because if you need to use 10 different buying platforms to access 10 different publishers, that's going to be problematic. And I feel sorry for the agency guys who are actually going to have to train teams up on that. But I think it's the job of technology vendors and broadcasters who are building these tools to ensure that they add enough value to make it worthwhile. And I think it's open knowledge at this stage that ITV are looking to bring additional supply into that ecosystem to make it worthwhile kind of spending your budgets there.
Yeah, yeah. I mean, I know I've certainly heard from plenty of agency people who say they've been sort of rubbing their hands together with excitement, waiting to try out Planet V. Mihir and Nicola, what's your thoughts on it? Is it, you know, how big of a development is it for you guys, and how useful are those sorts of tools generally?
I think the first thing to say is obviously it's amazing to see the broadcasters innovating and continuing to innovate given the current times and the challenges they've had, particularly this year in terms of advertising revenue. In terms of, I guess Kevin kind of covered it where he said that if there continues to be increased fragmentation, obviously it becomes a bit more of a difficult space for us as buyers. But if ITV secures some of this other published content on the platform, then it almost becomes a buying utopia for the buyers and the teams like mine and Nicola's, I guess. It's also really interesting because traditionally when we've bought broadcast AVOD, it's just been a conversation over the phone or email with the people at ITV or All4 or Sky On Demand, whichever platform we're using. And you talk to them about the targeting capabilities and they'll just come back to you with a CPM that is either standard for your agency or they've added a layer to it and it's become more expensive. And you don't really know what that's done to the universe size or why it's become more expensive. You just kind of just accepted it. At least now with the likes of Planet V, you can literally see as you add a layer to it of targeting, what that does to CPM, what that does to the potential universe size. And I think obviously this is not new in our industry, but to the TV world, it is new to TV buyers. And I think that's a really useful tool for us to see in the conversations that we can have with clients off the back of that as well.
Yeah, yeah. I think, sorry, go on, Nicola.
I was just going to say, I think it's really important that we do have those like opportunities to kind of delve into Planet V and see the different types of targeting, because as Mihir kind of mentioned, when we usually brief in a VOD campaign, I think it was quite surprising when you go through all the targeting capabilities on Planet V to see all these opportunities that we have, but we weren't necessarily we didn't really know that we had them. So I think it's a great opportunity for buyers to just educate themselves on the opportunities, but also to feed back to Planet V and ITV and all the other broadcasters that this is what we need, and maybe this is not what we're quite getting at the moment. So I think it's a great first step in the direction of how we buy.
Yeah, I think like outside of you know the BVOD services and their individual sort of siloed buying tools, how big is the opportunity, do you think, for real-time bidding-based programmatic buying? Because obviously that's going to be more for you know, leftover inventory, long-tail stuff. Do you think there's a big opportunity there yet, or will there be shortly in the future as supply improves?
I think a lot of it will depend on the level of data that's actually passed through in the bid stream, because going back to the data side of things and targeting, And also there needs to be a critical mass as well, because in order to cherry pick impressions from a pool of inventory, there has to be enough of it for you to decide which ones you want. And I think up until this point, we've been talking a lot about CTV and nearly bigging it up before it fully got here in a sense. But I feel like this year we've seen a huge shift towards increased viewership of CTV because of the pandemic and other reasons. And just generally people upgrading their TV devices, that alone increases the scale of CTV in market. So I think when you look at some of the publishers that are making inventory available, there's efforts to hide certain information like truncating IP addresses or masking postcodes. Obviously they do that for a reason, but I think you obviously need to have direct conversations with these sort of sellers and publishers to ensure that you're getting what you want.
Mm-hmm. I think that also that plays into what Kevin said. It will give the OEMs a real chance to show what they can do, especially when for the likes of Mihir and Nicola and their colleagues, you're in a position where these guys, the Samsungs, the LGs, Sony, if they have critical mass on connected TV, these are the ones that have the purest form of first-party data, because they can tell you what the size of the TV is, what the connection speed is, what programs are being watched, how long they're being watched for, how long do they take, do they binge, do they not binge, all this kind of stuff that when you're formulating a strategy and a buying plan for a client, you ideally would want to get your hands on. The challenge, as Kevin said, is you've got to have critical mass. The moment you start layering data on or layering frequency caps on, you're cutting your inventory in swathes, not in small amounts, in large chunks. And is the market ready for that yet? Maybe, maybe not. I would suspect that not even Planet V has enough volume to deal with 3 or 4 layers of targeting on it. Will that be the case going forwards? Maybe not. You know, they have one solution for the demand side. There are other SSPs out there, such as their own, that have other solutions that are able to provide equally large volumes of CTV inventory. But I really think that the way this is going to play out, and given the kind of comments that from the demand side, we will see the rise of the OEMs, and they will play an increasingly part, not least because they're the ones that will shift the hardware. They will sell the TVs to the consumer.
I want to take a look finally, and this is sort of related to that, but a few of the things commonly cited as blocks to investment in CTV. So one is measurement or the lack of it. Have we made significant progress over the last few years, and is it still something of a block to investment in CTV for buyers?
Yeah, I think we are beginning to make strides now. I saw just the other day that SpotX and the Audience Project have seemingly put out a pretty robust measurement tool alongside TechEdge, which is a platform that most agencies use in terms of measuring and planning. I know that Audience Projects have been focused on this for a long period of time, but it just the key thing, I think, for us, I don't know if Nicola thinks the same, but we often talk about CTV being able to add incremental reach to TV because the lighter viewers tend to be consumers of CTV inventory. And still, at this moment in time, I don't think there's a way of kind of measuring deduplicated reach between people watching linear TV and people watching CTV inventory. Please correct me if I'm wrong, but I think that is probably still the biggest challenge to us as buyers. I don't know if you think the same, Nicola.
Yeah, definitely agree with that. I think there's definitely a job to be done to kind of unify that kind of planning process, and then the buying process. But the reporting element is so important, and that learning from exactly why we're putting CTV on a plan. How much incremental reach is it adding? We should be able to, you know, similar to what we do with BVOD, and it's taken us a while to get there, but to understand exactly what that's adding to a plan, and then being able to say afterwards, yeah, tick a box, and that's what it did. But until we get there, I think it's going to be quite difficult to put. I mean, we've kind of covered a lot of the reasons, but the trust element, kind of seeing names and even down to the language, like the acronyms and language that people don't really know what it means. That's quite to clients. If clients are busy, they've got a lot going on, and if there's not the scale behind it and it's quite complicated and we can't see what it's delivered afterwards, then you can totally understand why a client might say, I don't feel comfortable, it's almost a bit too early. So I think the reporting element and being able to prove exactly why we're including CTV on a plan is really, really important.
I mean, obviously, related to trust, we still hear a lot of quite worrying stories about the level of fraud on CTV. Obviously, that's only in certain parts of the ecosystem, but is that also something that clients tend to be worried about? Is that a block to investment?
I'm not sure it's a block. It's a definite, and Mihir and Nicola could talk to this probably more firsthand, but from our point of view, it's a definite question. And it's a question that gets asked. And if you've been in programmatic a long time, you're seeing the same cycle of questions coming back that came with display, that then came with video, and then came with programmatic, and then and now quite rightly the clients are saying, well, what do we read in the press about fraud? What's actually happening? And those who are progressive on that will try and put in place the steps and measures that they can to help clients feel at ease and our agency partners feel at ease at that. You know, for us, we use Double Verify, and we use it on a pre-bid basis so that they have the fraud filtering capabilities before we spend any client's money. You know, that's one solution that's there, but it comes down to there has to be more commonality around this. There has to be more cooperation around this, and there has to be a level of understanding that you know, at this moment in time, I don't believe there's a one-size solution fits all, but everyone is trying to pull in the right direction. Yeah,
I think fraud is always going to be an issue in an open ecosystem. Bad players will always follow the budgets. It's inevitable. I think, not to harp on about Planet V, those sort of closed ecosystems would do a lot better job at protecting buyers from fraud because it is in itself a closed ecosystem. But as Alex said, I think it's up to the technology platforms to offer the assurance that fraud will not be a problem within other environments. So I know most DSPs today and SSPs will have some form of fraud guarantee, with the likes of White Ops and DV uncovering kind of sophisticated fraud schemes all the time. It's not easy to get past these guys. There's a reason why DV are now being floated at nearly $5 billion as of this week in an IPO. So they're doing something right. But no, it is, as Alex said, it's something we need to keep on top of. And I think it's through kind of collaboration that'll happen.
Brilliant. I'm afraid that's all we've got time for. But it's been very interesting to hear about the realities of the opportunities in CTV at the moment, and good to hear that progress is being made on some of those thorny issues that at points might have blocked investment before. So thank you very much to all my panelists.